Hello, this is Graham Norris. Today is September the 2nd, and today I thought cover the subject of risk in large multifamilies greater than 100 units. So before you get into this multifamily space, it's a good idea to be well aware of what the risks are. There's all sorts of risks. There's personal risks, lack of knowledge, for example. One of the things I made a mistake with was the lack of knowledge is being over leveraged. I wasn't able to assess when it became overly dangerous to be over leveraged. It left no room for things going wrong. And that's essentially what you've got to do. You've got to have room for when things go wrong. So you've got to be a little bit of a pessimist when it comes to assessing and mitigating risk. So assessing risk, so it could be in yourself and managing it. One of the ways to mitigate that risk is to have advisors, people who can come alongside and take a look at what's happening. Other risks, of course, are economic risks, where changes in the economy. So you might want to mitigate that with diversification, different types of investments. So they have different timings in the economic cycle, and it may help you weather the storm when it comes to your large multifamily investments. Another thing you can do, of course, is to weather economic storms, is to have a reserve. So 3 to 6 months in reserve of operating costs will be a wise move. For example, and then you might have partnership issues, relationship issues. Again, it's always good, the bigger your team, the better, and always address problems when they're small before they grow too much. So to mitigate that risk, breakdown or partnership is to have regular meetings and understand how your partners are feeling and the way things are going. Number two is prioritizing a risk. So what's a big risk and what is not? Maybe planning for stormy weather. Maybe your property could get flooded or have a fire, things like that. How are you going to prioritize them? Think about that prioritizing your task. How quickly are you going to act? What are you going to do when a tenant starts paying rent? What if there's a troublemaker in your apartments that's influential on other tenants? How are you going to manage certain situations? The third point is figuring out your risk profile. So how risk averse are you? Think about that. Think about how much money you'll put in reserve for those rainy days, as it were. When things go wrong, discuss this with your partners. What could go wrong and what would you do about it? Choose. Number four is choosing your risk strategies. So who's going to do what if a certain thing happens? Your management company. How well are they handling things? When there's something comes up that needs attention, think about the maintenance. How quickly are you going to get things done and repair it? What is executing your risk strategies? Think about how quickly, as I say, when things are going to happen. Insurance claims, for example. How quickly are you going to evict your tenants if they're not paying? Who's going to attend court? All these things have to be thought about and executed. And then finally, measuring residual risk. So what happens if, for example, investors need their money back before the project finishes? Are you able to maneuver there? Maybe fill the gap, find another investor to buy them out. How does that buyout look? What sort of penalties will the investor face? What can you do for them? Because you want to keep them happy. So these things are just 6 of the things I could think about with risk management. It's a very, very important subject. And as I say, I got knocked out of the game because I didn't play this right the first time round. And I wrote a little book called Cautionary Tales from Real Estate Investing. And I'll put a link in below, so do feel free to click on that link and get the book from Amazon. It's only a short little book, it's just 26 pages, but I'll be delighted to talk to you about those mistakes if you get the book. Book a call with me on calendly.com Graham Norris. And I'm back on the saddle, as it were. And this time I'm going to learn from those past mistakes. One of the great things with large multifamily is it does have plenty of mitigation processes that we can talk about. And I'm writing another book as well, address a lot of those issues. So ask me about that maybe next time. But you have a wonderful day, and thank you for watching this short video. Hope it's been helpful.